please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. You're with us here on a fresh new edition of Trading Hour. I'm Prashant Nair. With me is Surabhi Upadhyay. Surabhi, morning. Markets up for a change.
Actually, I think it's the turn of the month, or nearly the turn of the month, at least the turn of the series, that's proved to be optimistic and positive. It seems that bulls have decided, okay, enough is enough. March series is beginning, so we're in charge. So it's actually looking good because all the indices, the Nifty Bank, Mid-Cap, everything is pretty much at the day's high. And Prashant, today, I mean, what's really heartening for me after many days of this lull is the fact that financials, banks, this part of the market seems to be stirring back to life.
It is, absolutely. And, from the lows of 6th of February, the market is up about 200 odd points or so. I mean, not that it has any 200 points, it has any special significance or anything of that sort. But, I mean, it's good to see an up day after many down days. Overnight action has not been terrible for the last few days, but the only thing is today markets are paying attention. That's about it. So, the big factor has been dollar. Many were saying that dollar weakness, that story is behind and dollar will start appreciating and the yields will keep going, maybe past 3%. For now, that's not happening. I mean, the dollar is basically back down broadly against major currency crosses and the yields have also come off a little bit. The stock market is also looking a bit stable. So let's see how long does this stability last. Maybe we're able to build up a little bit more from here. But this Friday, as we wrap up this week, it's looking a little better. Okay, this is important news flow at the bottom of the screen. This is Aurobindo. Aurobindo had a decent move yesterday. It's up about 2.5 today. And this is sources to Cogensis, which essentially is a news wire, saying that US FDA has issued some observations at Aurobindo Pharma's Unit 4. And there is also some qualitative comment. The US FDA found no data issues at Aurobindo Pharma's Unit 4. When you say data issues, it's essentially data integrity issues, which is the more serious kind of violation. I mean, the more manageable is essentially the GMP, good manufacturing practices violation. But there is no data integrity issues. But this is all sources to wires. The stock saw a bit of a cut, sold off as soon as I think the first flash came, and it's recovering now after the second one has come on. So about 3.5 higher at about 607 odd rupees or so. We'll have more on this in a bit. Ekta reported, how the indication was that some of the observations are not critical or serious. But as I said, with all things US FDA, one needs to be careful because many times there is a slip between the cup and the lip, as they say. 608, 609 for now. Let's bring in some trading advice, Surabhi.
Yeah, absolutely. Just wanted to sort of add over there that this is the injectables and the ophthalmic business. Those are the kind of products that are produced over there. About $100 million is the revenue potential from this particular unit. And it seems that, as Prashant is pointing out, since it's not data integrity, therefore the stock now trying to climb back towards the highs of the day. Okay, let's get a couple of F&O strategies going. We have with us Krish Subramaniam of Altamount Capital. Good morning, Krish. First of all, start off a fresh news series. Thoughts on the index? Is there a trade on the Nifty or even the Nifty Bank that you have in mind now?
Good morning, Surabhi. Yeah, we have started on an optimistic note after pretty severe correction in February. So I think we could see some bounce coming about. I mean, there's hardly any conclusive evidence that the downside is over. But I think we could do some sort of a covered call here in Nifty, wherein we are recommending buying Nifty futures and keeping a very modest target of 10,500. But also one could hedge by selling at 10,600 strike call. And that's quoting it on 80. So that's our, and keep a stop loss of 10,350, which was level from where we saw all the bounce coming about. So a very modest bounce, but with also strict stop loss. And script specific, we saw some pretty good rolls coming about in likes of Hindustan Zinc. Actually, this roll seems to suggest that the shorts have not carried forward for the Mars series. So that's a heartening sign considering the fact that we did see some correction in the metal pack. So Hindustan Zinc looked promising, could be again bought for a possible target of 328. And one could keep a stop loss of 312. And the last one is Tata Global. I mean, this was one of the stellar performers in 2017. Saw some very decent correction, I think closer to levels of 260, 265, enjoys very good support. Could be bought for a possible target of 275, and also one could keep a stop loss of 262.
Okay, those are trading ideas from Krish Subramaniam. Krish, thanks very much. Mitesh Thakkar is also with us. Mitesh, morning. This 40-point bounce, what is the likelihood that this becomes larger as the day goes by?
So I think, I've been considering that. Good morning. Very clearly what has happened is that we've seen time and again 10,300, 320 hold out for the Nifty and about 24,800, 820 hold out for the Bank Nifty. Now we've got a bounce back. What is key is that this bounce back kind of manages to get past the area when the intraday averages are kind of cramped up, and if that happens, then I think we'll look at a stronger bounce back. So the level which I would watch is 25,300 on the Bank Nifty. Beyond that, I think we should get to about 25,600, 700 on the Bank Nifty, and similarly on the Nifty, I think the level is close to about 10,470. And above that, I think there's a good chance that 10,620, 630 range could be revisited. So that's the way I'll approach it. It definitely does tell me that, we've had some kind of a mild low formation around the 10,300 mark on the Nifty and 24,800 on the Bank Nifty. But I think a confirmation of reversal will happen at slightly higher levels. So for the timing, no point going short. But I think, look at stocks which are clearly giving you buy signals on the intraday and the daily charts. And that's where money can be made. And once we get confirmation on the indices, you can be aggressive on the long side as well.
Yeah, I know. After a long day, Mitesh, good morning. After a long day, it's looking like a clean start, and it seems to be picking up more momentum and strength. So, stock trading ideas. I'm guessing you'd have some buys on the list.
That's right. I have, in fact, one sell as well. And Vedanta is a buy. I think that's a buy with a stop at 330 for targets of 350. Again, the intraday charts are quite positive, and 330 was an important hurdle. And Asian Paints is a sell, and in fact, it's not really participating in today's up move. It's been underperforming in the last few days. If it breaks 1102, 1103, I think that will be a good swing and swing pivot breakdown. So below that, sell, keep a stop at 1120, a tight stop of about 1.5%, and look for declines to about 1065 levels.
Okay, let's get some questions answered. We have question. The first one coming from Naveen, who has got 300 shares of Mahindra Logistics. Purchased at 500 rupees a share. He wants to know the long-term view of the stock. Short-term, long-term, both, Mitesh.
See, I think it's a very recent listing, not much of chart history, but what I can make out over here is that around 430, 425, which is where the stock did some base building in December, that's a good support zone. So as long as 425, 430 is not being broken, hold on. And I think on the upside, close at about 520, and then we have obviously the highs around 550. So 520, 550 would be some kind of supply points. And since I don't have much of a chart history, I would say around 520, consider taking profits.
Okay, fair enough. By the way, just want to point out that there's a strong move on JP Associates now. Days high, 6.5% up on that stock, and JP Infra anyway is on up circuit. A lot of talk about resolution, the possibility of the JSW group coming in with the winning bid. And that seems to be working well in terms of sentiment on both the twins, both the stocks, JP Infra as well as JP Associates. Okay, one more viewer query now. Mahesh has 6,200 shares of NCC. The buy price there is 126. He wants to know whether to hold or to sell. If you could help him out, Mitesh.
Yeah, see, this chart looks very, very interesting on the longer term time frame. It went to about 140 last month and then corrected to about 101 this month, and then again has bounced back very strongly. I think this is a good positional play to hold on to. Keep a stop at about 117, 116. I think the bigger part of correction has played out. I think a retest of 140 is the minimum I would look for. So that's your first target, and then once it eventually starts getting past that, 155, 160 could happen. So my advice, keep a stop at 117, recheck at 140, or if you want to take profits there, that's also fine.
All right, Mitesh, thanks very much. Do keep sending in your tweets to CNBC TV18 News and CNBC TV18 Live with the hashtag AskCNBCTV18, and our experts will take you through what to do with the stocks that you own or stocks that you may like to own. 50 points higher on the Nifty, 10,433 is where we are at. So things are picking up a little bit, should I say. I mean, at least from the time that we started the show. The high is 10,442. So we're about, 8 or 9 points away from the day's high. So it's not looking bad at all overall. We take a very quick break, the first on the show, and we will come back. Okay, just a quick FYI, we told you so. So this is, we reported yesterday, my colleague Nisha reported yesterday that Sembcorp is one of the players, large renewable energy players, which is likely to file for an IPO. And Sembcorp has filed for an IPO, so we reported that, I think, yesterday. Gayatri Projects owns a stake in it, so Gayatri is seeing some buying a 0.25% or so.
If we're sort of looking from the highs of the day, still about 40 points higher, so not bad. That's the shape of the market as far as the equities universe goes. But right now it is time to talk commodities. Manisha Gupta is here with a roundup of all the action. Good morning, Manisha.
Morning, and thank you so much for that. Well, you know, it is the gold prices I want to talk about, and we have seen some pressure come in on that. Last week itself, we saw the prices decline, and this week hasn't started well at all. We actually are down 2% from the kind of highs that we saw in the previous week itself. But that's not all. In the Indian markets, we are facing further problems here into this sector. One, of course, since there are not many buyers, the Indian gold prices are trading at a discount of around $2 to $3 per ounce. And apart from that, there have been various reports on how the dealers, wholesalers and jewelers have stopped or are hesitant to sell on credit on a business-to-business basis here. I was also talking to one of the guys or directors on the IBJA front, and they said that expectations of funding norms could be tightened going forward in case of the jewelry sector there, and how many of the jewelers actually are now getting calls from banks asking about their loan accounts, about their operation accounts, about their dealings, etc., in sense of monies. So there is a bit of a panic that we have been talking about, especially when it comes to the jewelry as a sector. The expectation or the cue coming from the bankers also is that the non-funding based limit of the gems and jewelry sector may not be reviewed or rolled over in going forward. So that, of course, is a bit of a concern coming right now. Apart from that, you know, just to give you a sense that India has 19 bullion banks, and a couple of banks I spoke to a few minutes back also have confirmed that, yes, they are reaching out, opening up these accounts, asking further questions, asking for more verifications as well coming in from the jewelers. And that doesn't really sound, especially when it comes to this sector. It was not very far away in budget when the finance minister spoke about on how they are looking to develop a comprehensive gold policy, talk about a gold spot exchange, ensure that the gold is developed as an asset class. So from that positivity to the kind of panic that this sector is standing in right now is yet another reason that you have seen demand go down and the gold prices trade in a discount in the Indian markets right now. Tapan Patel of LKP Securities now joins us to talk more about that and prices as well. Tapan, hi. First of all, what is the sense that you get into the Indian jewelry sector? What are the kind of physical buying numbers that you are seeing, and what also is your sense on the prices?
Hi, Manisha. Good morning. Yes, as you said, the buying from the dealers and the jewelers are at lower levels, and we have seen lack of demand from the even retail sector. So we can expect that pressure to coming in the Indian prices also after the PNB issues, and SEBI has tightened the scrutiny on the diamond and jewelry, also brokers. So we can expect some pressure coming from that level side also. So when we can expect the demand from jewelers and retailers to come down from that level. So if you talk about international terms, we can also see pressure from COMEX levels. So 1335, 1340 is a good resistance level that prices are coming down. And also a stronger dollar is also pressuring the prices. So we can expect short-term pressure in the gold price, and selling around 30,500 is a good level to go short for the target of 30,300.
Tapan, also, how are you looking at the overall complex right now? Because almost everything is open in the red, and that's how we are trading right now also. Of course, there's a bit of a rupee appreciation, which could be pulling the prices slightly lower. But how do you overall see the commodities as a space today? Because we haven't been able to actually inch up or see any buying.
Yes, definitely. Market is in a lack of clarity. So market is trying to get the clarity from international cues, because only one factor is affecting the commodities prices now is the dollar index. So apart from dollar index, we have to check data from China, US, and other European countries. So if the data are coming good, then we can see further trend. But currently, the stronger dollar will definitely pressure the commodity prices, and we can see further pressure on gold prices also.
Anything industrial metals that you're picking up? Because almost everything is down 0.5% to 1% per piece.
Yeah, from base metal side, you can see the lead is a good bet to go short, because the lack of demand as winter season is over, and we can see lower demand from the battery side. So we can expect pressure to build up in lead prices. So we can expect selling around 166, 167 levels for the target of 164.
Okay, all right. Tapan and Manisha, thank you very much for getting us the commodity roundup. Just want to point out, in a market that's otherwise pretty buoyant, IT is seeing some caution. There is profit booking coming in on the large cap names, likes of TCS, Infosys, pretty much at the day's low. Wipro also now feeling the heat. You can see the IT index there. Days of outperformance, obviously weeks of outperformance. But now some pressure coming in. There's also some concern about tighter H-1B regulations that the US is planning to put in place. So that seems to be triggering a bit of money going off the table.
On the Nifty, 10,428 is where we stand. and the mid-cap index is up 1%. That's 206 odd points. So not very much has changed from when we started the show at 11. If anything, it's only gotten a little better. There's news on what else but Fortis. At the bottom of your screen, this is a CNBC TV18 exclusive, and this seems to be good news for Fortis. There is one more player which has joined the race to buy Fortis's assets, which are substantial. I mean, of course, along with assets also come problems which have to be resolved. But along with the fact that there is one more player, the fact is this is a foreign player which is coming in. Nisha is breaking the story, and she's joining us right now. Nisha, over to you.
Thanks for that, Prashant. Of course, IHH, the Malaysia-based company, a global major with deep pockets, was really in the fray for buying out Fortis earlier and now has re-entered this particular space. So therefore, it is promising to be a very hotly contested battle, and it's not going to be a free play for Manipal and TPG-backed Manipal to really go ahead with this transaction at this point. So it is coming in as a twist in the whole deal process for the sale of Fortis Healthcare. So I do gather, and several sources with direct knowledge of the development have shared, that IHH is now again showing interest, especially because the stock has fallen from the earlier highs that it had seen last year. So from that point of view, the valuation looks more attractive. With Singh brothers really quitting the board of Fortis gives a little bit of solace to the foreign player as well. And on the other hand, remember, while Manipal is in advanced stages, IHH has come back to really see if it can really buy out. So at this point, things are looking extremely hot as far as Fortis is concerned. But we had reported earlier that it is an advanced talk in which Manipal as well as TPG is engaged with the Fortis board. As far as this whole transaction is concerned, it was supposed to be a merger along with DPG, probably infusing about 5,000 odd crore rupees, so that the Manipal TPG combined really becomes the larger shareholder, the promoter shareholder of Fortis. So a few developments and a lot of those things that have transpired have given IHH enough solace to really come back in this particular game again. And remember here, the lenders who have really invoked the pledge shares of Fortis, where the promoter stake is now down from almost 50% in June 2017 to 3% now. So the lenders are also going to play a key role. And there again, whoever has the deep pockets will really get the game and seal the deal for Fortis. So it's a very, very interesting development. But still, I would say that Manipal and TPG were in the final stages. So if IHH has to come back in, they will have to up the game.
Nisha, I mean, since you've been speaking with people involved in the matter, any sense why large chains like Apollo, etc., for example, aren't interested? I'm just,
because
asking.
there are people with deeper pockets. The international players, they will have much more might. So a TPG can pump in probably a 5,000 odd crore rupees, which Manipal alone couldn't have. So the backing of TPG really makes a difference for a homegrown Manipal. And IHH has such deep pockets that it can give a very, very tough fight. In fact, IHH is involved in many other hospital transactions in the country, and sources suggest that they can buy it all. They have the firepower and the war chest built to buy a whole lot of them and increase the valuation game as well. So definitely the fight is now at the last mile. We do gather that if SEBI probe is not going to put a spanner in the works for this particular transaction, then the lenders, the board of Fortis, as well as the buyers would like to seal the deal at the earliest in March.
You know, that's a very, very critical point, Nisha, that you raised, because the next week is extremely critical for Fortis. The deadline to disclose all the details that SEBI has asked for is there. Why the company hasn't made public its Q2, Q3 numbers when that needs to be done, otherwise the stock moves out of F&O. So next week is extremely critical. In fact, the Fortis conversation continues in about 10 minutes' time. We'll be speaking with InGovern. Now, that advisory firm has come out with a scathing report on what it alleges are corporate governance lapses at Fortis Healthcare. So we'll just go through that report and find out what InGovern's point of view is on this entire matter. So the story is alive right here. Thanks, Nisha, very much for breaking the fresh details on this one. For now, let's move on to an exclusive conversation which Shireen Bhan had with Mr. Uday Kotak. Now, Kotak says that he is not a believer of protectionism. He also says that India is, as a country, should decide on the fate of its own banking policy.
I think we as a country have to decide what is the policy we want. Okay, and the answer is we have, if you take the top 5 private sector banks in India. 4 out of the 5 have majority foreign ownership. And they're perfectly fine within the law. But we all know that finally the voting is decided by two, or significantly influenced by two global proxy advisories, which is Glass Lewis and ISS. For diversified, so-called diversified shareholding is not a panacea for effective implementation of significant control in voting. So that is one
You've
reality.
publicly raised your concerns, but have you raised your concerns with the government?
No, I think, I'm sure everyone, all policymakers are aware, and therefore as we go through it, and the question we have to ask is, as government ownership is something which is a matter of great debate right now, whether it happens now, post-2019, what do we want? We want the Indian banking sector to effectively have disproportionate foreign control, or are we going to think about a future where we believe that India in financial services has an ability to keep it at least competitive for domestic owners to make a play at it? And that's a much deeper question, and I'm not a believer of protectionism, but we should have a situation where we are able to build banking and still have the liberty of calling it Indian banking.